You ever get that knot in your stomach when you're looking at the market? That fear that, one big crash could just wipe out years of your hard work? Well, there's a time-tested strategy that's built specifically to protect you from that. It's called diversification, and today we're going to break down exactly how you can use it.
And this quote from the legendary investor Howard Marks, it just nails it. It really captures the whole idea. It's not about finding that one single magic bullet. It's about building a system that's truly resilient.
Okay, so first up, let's tackle the foundational principle here, the investor's golden rule. Now, you've probably heard the saying before, but we're going to go way beyond the cliche and see what it actually means for your wallet.
Yeah, we've all heard this a million times, right? It's one of the oldest pieces of financial advice out there for a really, really good reason. It's simple, it's easy to remember, and honestly, it is profoundly true.
But here's where we pivot from just a simple saying to a real, powerful strategy. I mean, what does not putting all your eggs in one basket actually look like when you're building a portfolio? How do you apply that to your hard-earned cash?
So, how does this whole concept actually build a strong defense for your finances? Well, this next part is all about the mechanics, the how behind the magic of smart diversification. First, let's get a key term out of the way: market fluctuations. They're just the natural rhythm of the market, Prices go up, prices go down. This is totally normal, totally expected. The goal isn't to avoid them, it's to navigate them like a pro.
And this brings us to the secret sauce of diversification: decorrelated assets. This is the one concept you really need to get. It just means owning different types of investments that tend to move in opposite directions when the market zigs or zags.
And this is a perfect illustration of how that works in the real world. Think about it. During a market crisis, stocks might be taking a serious nosedive, but a decorrelated asset, like the classic safe haven gold, often sees its value go up as people look for security. See? One zigs while the other zags.
So let's be super clear here. The goal is not to avoid all downturns, because that's just impossible. The real goal is to have different parts of your portfolio basically compensate for each other. It helps smooth out the ride, and it helps you manage your overall exposure to risk.
All right, enough theory, right? Let's get into the actionable stuff. How do you actually build this multi-layered strategy for yourself? Let's look at the blueprint. So this blueprint shows you the 6 key layers of real diversification. First up, asset classes. Don't just own stocks. You got to mix in things like real estate or commodities. Second, think about risk levels. Balance those high-growth, riskier stocks with safer bets like government bonds. Third is geography. Look beyond your own backyard to international markets that might be on a totally different economic cycle. Fourth, sectors. You got to spread your investments across different industries, tech, healthcare, energy, so a bad run in one doesn't sink your whole ship. Fifth, company size. Own a mix of big, stable corporations and those smaller, high-growth companies. And finally, a really practical one: platforms. It can be a smart move not to keep all of your assets with just one broker.
But wait, hold on. There is one more piece to this puzzle. It's a seriously powerful diversification tool that, honestly, most people completely overlook. A real pro tip.
And here it is: cash. I know, it sounds crazy, but holding some of your portfolio in cash isn't being passive, it's being strategic. It becomes your opportunity fund. So when the markets dip and everybody else is panicking and selling, you have the power to swoop in and buy great assets at a huge discount. It is the ultimate counterintuitive power move.
But building true financial resilience, it's not just about following a formula. So for our last section, let's look a little deeper, beyond just the numbers.
Yeah, this gets into some next-level strategy. For instance, recent research has found that just looking at past data, the past numbers, isn't always enough. The real key is something called asset complementarity. It sounds complicated, but it just means understanding how different assets actually work together in the real world to protect you from shocks, not just how they looked on a spreadsheet last year.
Which brings us to this final piece of wisdom from the brilliant Charlie Munger. Take ideas where they are, but use your own brain to put them together. And this is so important. Look, this explainer is here to give you a framework, a set of tools, but your investment journey is yours alone. It is absolutely essential that you do your own research and build a strategy that actually fits your personal goals and your tolerance for risk.
At the end of the day, diversification isn't just some defensive strategy for managing risk. It is a proactive strategy for building a path to financial resilience, a path to real freedom. So the question is, are you ready to build that path? If this explainer got you thinking about what it means to buy back your own freedom, then go ahead and like and subscribe for our deep dive into the real action plan. And hey, let us know you're ready by commenting below with just one word: freedom.